Have you seen those sleek commercials for Spaceship Voyager, promising to take your money on an out-of-this-world adventure? They talk about revolutionary investing and building wealth for the future, but one question keeps popping up: do you actually get dividends from Spaceship? This question might be circling your head if you're new to investing or simply curious about this futuristic approach. Dividends, those sweet cash payouts companies sometimes give to shareholders, sound fantastic. Imagine your money in Spaceship, soaring through the cosmos and raining down dividends. But hold on to your astronaut helmet, because things in the investment world aren't always as straightforward as they seem. Let's blast off and explore the truth about dividends and Spaceship. First, we need to understand what Spaceship actually is. It's not a company itself, but rather a robo-advisor platform. Think of it as a friendly robot that helps you invest your money. Spaceship uses a pre-built investment strategy, allocating your money across different assets like stocks and bonds based on your risk tolerance. Now, here's the key point: Spaceship itself doesn't pay dividends. But the underlying investments it chooses for you might. Here's how it works. Stocks. Many established companies distribute a portion of their profits to shareholders as dividends. So, if Spaceship includes dividend-paying stocks in your portfolio, you will receive those dividends. Bonds. These typically pay regular interest payments. If Spaceship incorporates bonds into your mix, you will collect that interest. The catch? Spaceship doesn't guarantee you'll get any dividends or interest. It all depends on the specific investments they choose for your portfolio, and those can vary based on your risk profile. Companies can cut or suspend dividends, and bond interest rates fluctuate. So, how do you find out if your Spaceship portfolio might generate dividends? Unfortunately, Spaceship doesn't seem to offer a clear breakdown of the potential dividend yield within their platform. However, there are a couple of ways to get a better idea. Check the investment mix. Spaceship publishes their investment strategy breakdown. Look for a higher allocation towards stocks, particularly those known for paying dividends. This might suggest a greater chance of receiving dividend payouts. Research individual holdings. While it might require some digging, you can try to find out the specific investments Spaceship selects for your portfolio. Research those individual companies and bonds to see if they have a history of paying dividends or interest. Here's the bottom line. Spaceship can be a convenient way to invest, but it doesn't guarantee a steady stream of dividends. If consistent cash payouts are your top priority, you might need to explore other investment options or build a more customized portfolio with a focus on dividend-paying stocks. Remember, investing is a marathon, not a sprint. Focus on your long-term goals and choose a strategy that aligns with your risk tolerance and financial needs. Spaceship can be a part of that plan, but it's important to understand its limitations. With that said, thanks for watching, and until next time.